Hello, everyone. Welcome to another session of Do I Need a Business Attorney? Presented by Community Navigator, serving small businesses in South Fulton County, powered by SBA, involvement with Select Fulton. These are all the required disclosures I have to do before I start to give you information. Just a minute to talk about the SBA Navigator program. It's actually a program paid for by the SBA to provide service providers directly to the public. And our job to provide you with information through webinars like this, through live events, which we have one-on-one training sessions. And a lot of this information that you have, you'll see that website repeatedly on this slide as we go forward. So, I'm a business attorney. I help people start their business, buy and sell businesses, raise capital, and generally act as a corporate counsel on all business related matters. For purposes of Community Navigator, I'm here today to just generally give you an idea of what sorts of services are available to a business owner by a business attorney. A lot of people had an idea of that, hey, I might need an attorney for my business, but they've never really understood what the things that we can do. This is part two of the session. Part one is somewhere already on demand. You have to go back and look at it. But I don't know how many parts. I mean, how many parts are going to be? I don't know. This is part two. So we know there's two. We'll get to the rest later. And if you guys send an email or suggest something to us, that a topic you want me to cover, I'm more than willing to do that. The information we're going to cover today is really about entity formation and forming an entity. As I mentioned before, we want to thank our partners, the SBA, Select Fulton, and Greater Fulton, South Fulton Chamber of Commerce. We're all working together to provide these sort of services to you, and we look forward to it. Okay, let's get down to business. When we spoke in the last webinar, when I spoke in the webinar, I went through a couple of scenarios in which you might need a business attorney for. And we have, I guess, 9 here. Last time we covered what does it mean to have a real business entity. And this time, we're going to talk specifics, how to make your business become an entity. And so just to recap from last time, what does it really mean to be a business entity or LLC or corporation? Borrow money, sign contracts, real estate, vehicles, going public, buy plane tickets, hire people, train people, apply for government contracts, ownership, issuing ownership for money, shares in the company. Look, you're not listening to this if you don't understand the values of starting a business. What you're listening to it for is how to do it. But I think sometimes people need a little refresher. That's in part one. So today is how do we become an actual business entity? And a lot of times when people are starting their business, they don't really know where to start. And this session today is really going to talk about the starting points of starting a business on paper, right? We know we have our business in our head. I want to sell cupcakes. I want to offer these services, but we don't know what it means on paper. So in this session today, we're going to talk about documenting your business and how to properly document it to start it. So one of the reasons we create this LLC or corporation or business entity is we are trying to provide protection for liability, meaning that somebody can treat that person or that business separately than you and your person. And that's the sole mission. And in doing that, the government says, if we want to give you personal liability protection, you owe us some information. Which government says that? The state governments say that. So LLCs and corporations are created by the state, not by the federal government. So the state government has a series of hoops you have to jump through in order to get this liability protection. But at the end of the day, the state is the one that certifies your business as being legitimate. And we're going to go through that process today is how do we turn this into a legitimate business? So at the beginning of your business life cycle, these are called formation documents. right? And if you were a person, they'd be called business certificates or your birth documents. Well, in business, these are your information documents. These are the documents you carry around to show people you are legitimately a business. One of the first places you'll have to go, and again, some of these things can be run in parallel, but one of the first places to get this liability protection is to your local Secretary of State or corporation's office or division office. And there, just when you make your choice between whether you rather be formed as an LLC, in which case you have articles of organization, or if you want to be a corporation, you have articles of incorporation. Different states have different requirements. Most states, you can do this online and fill it out. However, you need to know that there are certain sections of the application for the articles that may require some legal analysis. And sometimes that's where some people might put too much information in there. It's usually not enough because the state will require a minimal amount of information. But I caution people when they're adding information that the state requires is optional or something that doesn't necessarily have to be filled in, be very careful with those sections because what you put in that section will be public information. So I've seen people put down who the owners of the company is in that section. I wouldn't recommend that because you're showing people who owns the company. Some people put social security numbers in that sections or EIN in these sections where you can write additional information. I would just put the minimal amount, if you're going to do this yourself, put the minimal amount of information in there that you can. This is about, does your business need an attorney? So what does the attorney put in there? So typically in the articles, I will provide the information. There's two really main addresses you'll need. You'll need your business address and then a mailing address, excuse me, your resident agent address. So your business address will be the address where you'll get junk mail and all of that sent to. So they'll actually give you two choices, usually a physical address and a mailing business address. And you put your physical address in and then you put the mailing if you have a P.O. box. That's where you're going to get all your spam and solicitations. But then they'll ask you for a registered agent, and that is a person or an entity that is physically located in your state that will receive any important correspondence on your behalf. So people ask me all the time, can I be my own resident agent? Yeah, of course you can. What it'll mean is that when they need to give you important communication, they'll deliver it to that address. Now, typically, the most important information that comes to a registered agent's address is a lawsuit. So I don't know if anyone's ever been served with a lawsuit, but that's not fun. It's usually somebody creeping around your door or some sheriff looking for you. So a lot of times people will hire third-party registered agents. In some cases, the lawyer say, hey, I want my lawyer to be the third-party registered agent. In some cases, they'll say, I'll do it myself. I'm not going to get any trouble. I want to spend the money. I'm okay with it. But the registered agent is an important part of your registration process for your articles. When you get your articles processing time, it takes different amounts of times. Different states, some states can do it instantaneously. Some of them take 7 to 10, even 20 days. So you have to check with your local state to see how long it would take for you to have your articles returned to you. But as an attorney, we have ways of expediting it. I mean, obviously it's more money, but in Georgia, we can do an LLC or a corporation the same day practically. So that's actually extra money, but it's possible. So the attorney can actually get this off of your plate and get it done without you worrying about, well, am I disclosing too much information? Should I be the registered agent? These are decisions that we can make fairly quickly and efficiently. Once you file your articles with the Secretary of State, the second level of paperwork you'll need is what humans call a social security number, businesses call tax ID number or federal employer identification number. And this is issued by the IRS, of course. So the IRS is the one that wants to know what business have you formed in what state and how would you like to be taxed? Now, I could probably do a whole session solely on how to complete an EIN and what session to be taxed on. But instead, I'm going to leave that to the accountants. It's really the lawyer. What we do is we form the entity and we'll get you your EIN number and we'll put you at typically the default setting of taxation for what your entity is. So if you have a specific tax category you like to be in, you want to have an accountant. But an attorney can get you set up. And then some attorneys will do some tax classifications if they feel like you need to be in a different tax category. They will do it themselves. But a lot of times we work with the CPA to choose the right tax category when you complete your EIN. Even if you complete your EIN yourself and you're not sure if you chose the right tax category, accountants can typically go in and fix that and adjust it if you've already filed. I mean, they're going to see what you filed at the end of the year when you do your tax return. So you want to make sure that you consider having an accountant either before, preferably before or after you get your EIN, just to make sure you're in the right tax category. Also, you'll need to, if you're selling products and goods and services to the public and consumers, you'll need to consider getting your sales tax ID. And you get that at the state level. You know, you go to the store, you buy something, there's a sales tax. That money is not the store's money. It's the state's money. And the state, you have to present to the state what you've sold so that the state can then collect those taxes from you. And so you keep those taxes for the state and you send them to the state. Don't play with sales taxes. Don't play with sales taxes. Do not play with sales taxes. Okay. If you're collecting sales tax, you need to complete those reports. Some states is monthly, quarterly, whatever. Let them know what you collected and pay it, because they will audit you and come in and check and see if you have been paying your sales tax. So don't play around with sales tax. If you have a storefront or you're selling goods that requires sales tax, do it. If you're not sure if you should be collecting sales tax, most of your state tax departments will say on your website, you know, what qualifies as collecting sales tax or not. But you'll need a sales tax ID if you are going to sell products to the public and have to collect taxes on it. Now, if you sell a product to somebody else who sells it to the public, no taxes. You can get what's called a reseller certificate or a tax exemption form from them to say, hey, I'm supposed to charge you sales tax. And they go, no, no, don't charge me sales tax because I sell it to somebody else and I charge them tax. They can give you a sales tax exemption certificate that you can keep. So when the auditor goes, hey, you didn't charge them sales tax, you go, no, I have this here showing that I didn't have to because they resell it and they need to charge the tax. So that too can get complicated, but you should be aware that these is part of the formation doctrine. This is sales tax. Other state taxes that you have is your employee withholding numbers and withholding taxes. So if you hire people and they fill out their tax form, you have to pay taxes on what you pay them, and they have to pay taxes on what you pay them. But also, they might have you set aside money for them, what's called withholding, that apply towards their personal taxes later. That money is not your money. It's not your business's money. It is their money. So you need to pay that into the Department of Revenue in your state, and that's called the withholding tax. So if you have an employee, you need to get a withholding tax number so that you can put their money aside and pay their money that they've asked to be put aside for their taxes. But again, also too, you'll need to get something from the Department of Labor regarding unemployment tax or your payroll tax. So the other money that you have to pay, the company has to pay in addition to what the employee pay. You both split about 15% on your payroll. You pay about 7.5% more, and they get 7.5% less. But collectively, the government gives roughly about 15% of any money you pay somebody on payroll. But you know, people might hear about this and they don't know what to do. And they're like, I think I should be collecting some sort of taxes. The best way to avoid dealing with this at all is to hire a payroll company that can generate your tax report, take the money out, pay it to the government, pay it to everyone else. I typically recommend that. Some people do it themselves using QuickBooks, or some people are really good mathematicians. They like the numbers, they like figuring things out. They don't mind quarterly reporting and not missing the reporting and turning all this stuff in. But when it comes to employees and collecting taxes for payroll, I recommend outsourcing it to somebody, because if you get a letter from the Department of Labor or Department of Revenue or the IRS, it's nothing better than pointing at them and going, hey, that's on them. They have all the reports. They filled it all out and they usually are to help you, you know, respond to it. Whereas if you've done it yourself, hey, good luck with that, right? So, you know, making sure you have a good relationship with a payroll company or an accountant that processes payroll. Some bookkeepers and accountants will do payroll. Then they will help you out. But these are, you get your information, your tax documents to make these reports and filings with the state. And then also, as part of your information documents, your operating agreement. Well, operating agreement, if it's an LLC, if it's a corporation, is probably a shareholder agreement. Your operating agreement is the contract between the owners of the company. You don't file it anywhere. You just keep it in your safe between each other. Occasionally, you might show it to a bank, but the operating agreement is like a piece of clay. It can really be carved in any specific, customized way you need it to. So if you and a partner got together and said you have to eat 5 apples on Friday for 5%, you can put that in an operating agreement. So those are the things that make an operating agreement so attractive with an LLC, is because how flexible it is to create, to go with every possible scenario that you can have between owners. And believe me, I get them about, hey, I want to put in this much money, or if this person doesn't work in this many hours before this date, or after 10%, I want them to move up to 20%. I mean, there's all these triggers and things that individual deals are made. And you should never just create a deal to fit with legal. Legal should make themselves wrap around your deal. So what an attorney does is, once you get your terms and conditions of how you and your owners want to work together, we actually prepare this operating agreement customizable to you. Now, some people will go out and get an operating agreement off the internet and change it. And, it is what it is. Am I going to tell you it's a bad operating agreement? No, but I'm going to tell you it's not an operating agreement prepared by an attorney, because we see things that you don't see. For example, if there's 50-50 ownership, there's ways in which we have to anticipate things could go wrong. And there are clauses that we can put into agreement to cover a 50-50 situation when the partners don't get along. There's also things we can suggest that you haven't thought about. Maybe you need to consider having a board of directors or some sort of managers. Maybe you need to consider, how long your managers are going to be employed. There's a lot of issues that comes up in the operating agreement that you should go by an attorney with. But us as legal counsel, I typically sit down, listen to what you and your owners are looking to do, and then I create the operating agreement. Now, the interesting thing is, when I have a lot of members coming together, I will actually draft the operating agreement first, just to make sure they're all on the same page, and then do the formation documents. Because nothing worse than forming a company, get everything right, and then no one can agree on the operating agreement. So typically, if you have more than one person, I would say go. Now, some people will go to an attorney to get an operating agreement, and they'll get the operating agreement from their partner. Partner will say, hey, I went to an attorney, made us an operating agreement, sign here. You should know that that attorney works for the company, but they're only putting in an operating agreement what that person told them to do. If you really want to make sure you're signing the right operating agreement, you should have an attorney look for you at that operating agreement to say, hey, my partner gave me this operating agreement. I wasn't sure. I know we have an attorney on board, but I wanted to make sure I'm covered on my end. Now, after you sign, the attorney represents both of you in the company. You should be good. But sometimes I will tell people, if you're not comfortable, you should have your own attorney to help you look through this operating agreement, because usually it's a lot in there, a lot of things that you're not used to seeing. So the operating agreement is one of the key components to forming your entity, especially if you have two or more people. Now, if there's one person, do you need an operating agreement? That's been talked about all the time. And I think the short answer is, if you want one. I mean, it's a contract between yourself. So you literally can make it at any time. You can delete it at any time. I don't know about you, but I've never really had a contract with myself, except when it comes to like weight loss and stuff. They're like, I'm probably gonna lose this weight. I promise you, we gonna work on it. But for the most part, the a single member doesn't need an operating agreement. Now, sometimes you'll create one because you get in situations where people just can't get past, you don't have an operating agreement, right? At a bank or applying for minority certification, they just go, you don't have any operating agreement. You're like, it's just me. And so in that case, we have to create a single member operating agreement. So you sign a contract with yourself and you give it to them. But they don't, I mean, it's a contract with yourself. There's not a lot they can do. The only time the single member operating agreement can be tricky is if you have a holding company that owns your LLC, and you as an individual is going to manage the LLC. right? So your holding company or another company you have existed or another partnership, whatever, another LLC or corporation is going to be the sole owner of the company, but you as the individual is going to run it. So what would happen is you'd have a single member operating agreement electing you individually as a manager. So even though another entity owns that entity, you still have authority as a manager to operate it. And here's what I can do as the manager. So in that situation, is really two different people, right? Because we talked about the entity is a different person and you are a different person. And so therefore you probably need an operating agreement. Same thing, if you own a company, but you're going to let somebody else manage it, you probably need an operating agreement, even though you only have one owner. So that's really if of all these things where I would say you would want legal counsel for, I would definitely say operating agreement ranks the highest. Okay, what do we have left? All right, business bank account. So you take all these documents, you go down to your local bank and you go to open up a bank account. And they're going to ask you for your articles. They'll be able to pull that up likely from their local state search. They'll ask you for your EIN. I don't know if they'll ask you for your sales tax ID and your withholding tax ID, et cetera, but they might offer you payroll services. Hey, you need help with your payroll, things of that nature. But opening up a business account requires that because they're not going to open up a business account. You don't want them to open up a business account in your personal name. You want it in your business name. And once you get money into that account, well, you'll put up some money to open it. But once that account is open, your primary goal as a business owner is to get as much money in that account as possible. Now, everything on this slide is what you need to open up a business. Everything, right? So a lot of times when people want to start a business, they get terrified by this page and they think and they process and they research and they're not sure. And I'm here to tell you, don't let this page last longer than 1 hour in your life. Okay, find an attorney, find an accountant, whoever, and let them do this because it's not worth it. Because the biggest part about running a business is not the formation. It's what happens after you form the business. Getting the customer, the contract for the customer, hiring an employee, somebody giving you money, paying back loans, getting a loan. That's all the important part we have to get to. Don't let this process paralyze you because a lot of people will sometimes decide they can't really start their business on paper because they're not sure on how to do any of this. Some people might not need to get sales tax or an employee withholding, and that makes it things even simpler, right? Or they don't, it's just them, so they don't need an operating agreement. That's even more simpler. But I try to tell people don't let this analysis on how to get this done hold you back. Look for counsel to help you, look for an accountant to help you. Help. You can use a navigatorfc.com and try to schedule a one-on-one session, and I'll help you. But that's the whole purpose of this presentation today, was just to let you know that business formation is not as hard as you think it is, and to use counsel where possible, especially when you have a complicated operating agreement and sessions. So that's the presentation for today. I want you to have a fantastic day. Remember that you go to Navigate FC for all of our training videos. You'll also see our upcoming in-person seminars and also have access to book one-on-one sessions with some of our spokes or service providers, technical service providers that are here to assist you like myself. It's been fun. I love sharing information with business owners. We'll be back for part 3 sometime soon. Thanks and enjoy your day.